Hey everyone, and if you've ever felt completely overwhelmed by the world of investing, you are definitely not alone. It seems like everyone has an opinion from day trading to crypto, and it can make a beginner just want to give up before they even start. But today, we're cutting through the noise. We're going to talk about what most beginners should try actually invest in to build a solid financial future. First things first, before you even think about putting money into the stock market, you need a financial safety net. I am talking about your emergency fund and tackling high interest debt. An emergency fund is typically 3 to 6 months of living expenses saved up in a separate, easily accessible account. This protects you from unexpected job loss, medical emergencies, or car repairs without having to sell investments at a bad time or go into more debt. And speaking of debt, if you have credit card debt, payday loans, or anything with super high interest rates, pay those off first. The guaranteed return you get from avoiding 18% or 20% interest is far better than any potential stock market gain. It's like getting a guaranteed risk-free profit. Seriously, if you've got that covered, give yourself a huge pat on the back. Let me know in the comments if you are working on your emergency fund right now. Okay, so your foundation is strong. Now, what is the actual investing part? For most beginners, the absolute best place to start is with broad market, low-cost index funds or exchange-traded funds, often called ETFs. Think of an index fund as a big basket that holds a tiny piece of hundreds or even thousands of different companies. For example, an S&P 500 index fund holds small pieces of the 500 largest U.S. companies. Why are these great for beginners? Because they offer instant diversification. Instead of trying to pick individual winning stocks, which is incredibly difficult and risky, you are investing in the entire market or a large segment of it. If one company struggles, it barely affects your overall investment because you own so many others. They also have super low fees, which means more of your money stays invested and works for you. It is a hands-off, set-it-and-forget-it approach that has historically outperformed most actively managed funds over the long term. Next up, if your employer offers a retirement plan like a 401k or a 403b, especially if they offer a match, you absolutely positively need to be contributing to that. An employer match is free money. If your company says they'll match up to 3% of your salary, that is an instant 100% return on your investment up to that point. You can't beat that anywhere else. These plans also offer fantastic tax advantages, either tax-deferred growth in a traditional plan or tax-free withdrawals in retirement with a Roth. If you don't have an employer plan, or even if you do, consider opening an IRA, which stands for Individual Retirement Arrangement. Roth IRAs in particular are powerful for beginners because your contributions grow tax-free and your withdrawals in retirement are also tax-free. So we've talked about what to invest in, but there is one more crucial element: how to approach it. Investing is a marathon, not a sprint. The real power comes from consistency and patience. Set up automatic contributions, even if it is just $50 or $100 a month to start. This way you are regularly investing, and you benefit from something called dollar cost averaging. This means you buy more shares when prices are low and fewer when prices are high, averaging out your purchase price over time. Don't try to time the market. The best time to invest was yesterday. The second best time is today. In summary, for beginners, prioritize your financial foundation by building an emergency fund and paying off high-interest debt. Then focus your investing efforts on low-cost, diversified index funds or ETFs, and maximize any employer-sponsored retirement plans, especially those with a match. Be consistent, be patient, and let compounding interest do its magic over the long term. If you found this helpful, please hit that like button, subscribe for more practical financial advice, and let me know in the comments what your biggest investing fear is. Check out this video next for more tips on starting your investment journey. Thanks for watching, and I'll see you in the next one.